Now imagine unlocking the secrets to a financially secure retirement where every pound you save works as hard as possible for you. Now this is going to be the ultimate 10-round showdown between the almighty pension and the renowned ISA. So which strategy do you think is going to come out on top in this big battle? I'm going to cover some of the overlooked and the hidden advantages to both, as well as looking at the potential pitfalls and offer some insights that can help make or even break your retirement plans. This isn't just a decision about choosing where to put your money. It's about making the smartest move for yours and for your family's future. Now this promises to be even bigger and certainly more useful than the Tyson versus Paul showdown.
Let's get ready to rumble!
So welcome back to all the personal finance crew, and if this is your first time, a very warm welcome to the Economies channel, where together we're going to be looking and learning about the language of money and wealth. We're also dedicated to mastering money and making financial wisdom available to all. My name is Simon and I'm a chartered financial planner, normally based in the UK, but I'm recording this video in the magical island of Ibiza. Now I'm going to be covering a major decision between two heavyweight saving and investment options that can alter the shape and the style of your retirement. This is going to be the ultimate face-off between pensions and ISAs over 10 punishing rounds. So have you ever wondered which one would give you the biggest bang for your buck? Well, I'm going to break it all down for you in a fun and easy to understand format throughout the entire video. So whether you're just getting started saving, or if you're looking to fine-tune your savings and investments already as part of your overall retirement game, so stick around to the very end to see who's the eventual winner. Now it's very muggy and very warm up here, so I'm just going to pop down to the air-conditioned office and I'll see you in a minute. So before we call out the fighters, I'm going to pop up the usual disclaimer to state that this video is for education and entertainment purposes only and should be misconstrued or misunderstood as giving financial advice. Round 1, tax benefits. Let's start with pensions. Now, contributions to a pension scheme come with significant tax relief at your highest rate. So for example, if you're a basic rate taxpayer and you want to contribute £100 a month into your pension, you're also going to receive 20% tax relief or £25 on top of that, making the gross contribution £125 per month. Now with ISAs do not offer any upfront tax relief at all on the contributions. However, all the growth within an ISA is tax-free, and that can be very beneficial for you in the long run. So this round, I'm going to award it to the pension. Round 2, access to funds. Well, with pensions, typically you can't access your pension funds until you reach the age of 55 currently, but that's rising to 57 in 2028. So this ensures that your money is used for retirement and generally is 10 years before the state retirement age. So what that means is, as a state pension tends to increase over time, your ability to access your funds is also going to increase over time as well. What that means is, if the state retirement age goes to 68, it's very likely that you're going to be able to access your pension funds from age 58. With an ISA, you can access your money at any time without penalties. This provides more flexibility for unexpected expenses or for opportunities. So this is a very close call. Both the advantages and the disadvantages of a pension is not having access to the funds until at least age 55. And this prevents us being controlled by our emotions and succumbing to the temptation to withdraw our money a lot earlier than planned. So this round points to the ISA. Round 3, employer contributions. Well, one of the key benefits of workplace pensions is that the employer contributes as well, and this can significantly boost your retirement savings, especially over the long term. Now, if you can use salary sacrifice, and sometimes this is called salary exchange, you might also be able to request and get some of your national insurance refunded into your pension as well. Now, if you're a company director, don't forget your company can make contributions into your pension, and this is an allowable business expense. And what this is going to do is lower your corporation tax bill. Now, ISAs do not benefit from employer contributions, meaning your savings are going to rely solely on your own contributions and the investment growth. This round points to the pension. Round 4, investment options. Well, pensions generally offer a wider and a broader range of investment options, which are often managed by professional fund managers, especially if you select a SIPP. With the stocks and shares ISA, you can have the same type of freedom to choose your own investments or select from a wide range of various funds, allowing for a more personalised investment strategy. And this is going to be a very close call. So this I'm going to call a draw. Round 5. Fees and charges. Well, workplace pensions have a fee cap on their default funds of 0.75% a year. Now, personal pensions and SIPPs have also got a platform cost and an investment charge to consider on top as well. Now, passive investments tend to be lower cost and actively managed funds tend to be more expensive. Now, pensions can also have setup costs as well as exit charges as well. Now, as the ISA tends to be simpler to administer overall, the charges can be lower and a lot more easier to understand. So in this round, it goes to the ISA. So if you're finding value in this video and having some fun as well, then please hit the like button and subscribe to the channel. So you might want to tilt your phone or even your tablet to the side so you can see the video better, and then hit the notification bell so you can get this financial wisdom to as wide an audience as possible. And remember, this is your channel and this is your voice. So if you've got a preference for either a pension or even an ISA for your long-term savings, then please let me know in the comments section below. Round 6. Contribution limits. So the current gross contribution limit for a pension from all sources is £60,000 per year, or 100% of your earnings, whichever is the lower. An ISA across all the options we mentioned earlier is £20,000 a year. So in this round, the points go to the pension. Round 7. What about for your children? Well, you can open a children's pension with a gross contribution limit of £3,600 per tax year. And that can be invested either in cash or stocks and shares as you see fit. Now, you can also open a junior ISA with a contribution limit of £9,000 per tax year. And you can also choose to invest in either cash or stocks and shares. So this round goes to the ISA. Round 8. Death benefits. Now, a pension will generally be outside of your estate for inheritance tax purposes, whereas an ISA is going to form part of your estate for any IHT assessment. So for this round, the points go to the pension. Round 9. This is financial planning. Well, contributions into a pension scheme can lower your relevant earnings. And as a result, this can help you control some of your tax bills and mitigate the effect of these over the long term. For example, if you earn £60,000 a year and you're a higher rate taxpayer at the moment, you can make a gross contribution of £9,730 into your pension, and that's going to lower your earnings to £50,270, and then as if by magic, you then become a basic rate taxpayer. Now, an ISA doesn't have this magical benefit. So for this round, the points go to the pension. Round 10. Income tax on withdrawals. Now, a pension can offer a fully flexible range of withdrawal options, which can include the 25% tax-free cash, either in a lump sum, multiple smaller lump sums, or even phased on a monthly basis. You can have flexi access drawdown, you can have part tax-free cash and part taxable income on each withdrawal, and any taxable income is going to be taxed at your highest rate. With an ISA, all withdrawals are paid tax-free with no deductions of income tax at all. Now, whilst the pension options are very powerful, they can be complicated and can be misunderstood as well. So due to the simplicity of the ISA withdrawals, these points in this round are going to go to the ISA. Now, this has been a very close call, but my scorecard shows that the pension has just taken this showdown ahead of the ISA. So the winner for this video, at least, is going to be the pension. So in conclusion, pensions are generally the better option for maximising retirement savings due to the combination of tax relief, employer contributions, and the potential for significant long-term growth. For individuals in the higher tax bracket, the tax relief on contributions is a particularly huge advantage. Now, pensions can also encourage discipline, long-term savings, because they restrict access to your pension until a minimum, at the moment at least, of age 55. Now, ISAs offer unmatched flexibility, and they're an excellent complement to pensions as they provide tax-free growth, the ability to access funds without penalties whenever you want, and that makes them suitable for both medium as well as long-term savings as well. Now, ISAs are also simpler to understand and to manage, making them very, very popular for a wider range of people. Now, as a chartered financial planner, it's often the case that a combination of both pensions and ISAs are used to give the best options for our clients in retirement. So thank you for watching to the very end, and as always, for your time and for your patience. Thank you for being with me, and I'll see you all again this time next week.